Hey, what's up? It's Benj here with Triple Cord Real Estate, and in this video, I have a full update for you on what has been happening here in the Boise housing market lately. And I also want to share how our numbers compare to the U.S. national housing average. And then at the end, I have a few thoughts on what I think the numbers might be indicating about what might be in store for us in 2023. So be sure to stick around for that. So the median price here in Ada County went down again last month. We're down to $487,495. And that's quite a big drop actually from the month before. It's about a 9.7% decrease month over month. So as compared to December of 2022, year over year, we're at a decrease of about 5.34%. Now, since we peaked back in May of 2022, we've come down about 19% total. We peaked at 602,250. We're down to 487,495. And let me break those numbers down a little bit to show you how the existing home median compares to the new construction home median. Existing homes have come down about 7%, 6.8% year over year. Median for existing home is 479,400. New construction has been hit harder, about more than double than that actually. The average or the median for new construction is 588,945, which again is about a 16% decrease year over year. Now, a couple interesting metrics to pay attention to here is the percentage of the original list price received for a transaction. So that number is down to about 92% here in Ada County, which means on average, sellers sold their house for about 92% of what they originally were asking for. So that's through seller concessions or price decreases. That number is down from about 97% about a year ago in January of 2022. So that works out to be about $60,000 less than the list price. Buyers are recognizing that the cards are in their hands, and on average, they're buying homes for about 8% less than the original list price. Days on market have also gone up. We're up to 71 days now, which is over 2 months. When we peaked back in May of 2022, that number was only 14 days. So quite a significant increase in a matter of about 8 months. Now, the interesting number to pay attention to here is the month supply of inventory. And as I've mentioned in several previous videos, we've seen that number steadily come down. So we finished January with 1.68 months supply of inventory. That number was almost double of what it is now back in September of last year. So we're at about 3.02 months. And it's been steadily coming down over the past 4 or 5 months. Now, this downward trend, again, is connected to the rise in the interest rates. Sellers are recognizing that if they sell their house, they have to buy another one. And if they're going to take a loan, they're going to be taking a loan at a much higher interest rate. So are they willing to trade a, say, 3.25% interest rate for a 6.45% interest rate for a comparable home? That's going to significantly increase their monthly payments. And so if they don't absolutely have to do that, they're not going to do that. And that has resulted in fewer listings overall here in the Boise housing market. The upshot to all of this, though, is that the decrease that we've been seeing in the listings has resulted in a different situation than what we saw back in 2008. In 2008, we had a much higher month supply of inventory. Look at that number there. In January of 2008, that number was 7.9 months, so about 8 months worth of inventory. And that number rose over the following year to about 9.2 months and continued to rise over the coming months. So the massive decrease in prices that we saw back in 2008 and in 2009 was synonymous with a large increase in inventory on the market here in Ada County. So as you'd expect, sales are down quite significantly here in Ada County, down about 33% year over year, 32.8%. And that's related almost exclusively to the drastic rise that we've seen in the interest rate over the past year. So overall, the Boise housing market has taken a hit over the past year. But how do those numbers compare with what has been happening across the United States? Sales are down across the U.S. about 37% year over year. Now, that number is pretty close to what we're seeing here in Ada County, but actually a little bit higher. Ada County, we had a decrease of about 33%. That number slid down about 0.7% from December. So we're seeing a slow decrease in sales month over month as well. nationally. The median price for homes across the United States is $354,300. So that's about $130,000 less than what it is here in Ada County. But notice that that's a 1.3% increase from the median last year. We have not seen a decrease year over year in the median for 131 months. And that's the longest streak on record. The average number of days on market is 33 days. And that is slightly ticking up as well as the months go by. And here's an interesting quote from Lawrence Yun on some of the research that he's done recently on the national housing market. He says homes sitting on the market for more than 60 days can be purchased for around 10% less than the original list price. Now, I think that's interesting because in Ada County, the average number of days on market is 71 days, so more than 60 days. And most homes are sold for about 8% less than the list price. So it's very close to what Lawrence Yun has been saying here as it relates to the national housing market. The month supply of inventory is slowly going up across the United States as well, but the number of distressed transactions has not changed at all. Now, when it comes to building, builders across the United States are still cautious. Last month, we saw a 4.5% decrease in building permits. And that's the 5th consecutive month that we've seen a decrease in home starts across the United States. Year over year, that's a 21% decline in home starts. But it is important to note here that home builder sentiment is on the rise. The National Association of Home Builders have an index that they use in order to track what the home building sentiment is. And over the past several months, we've seen that number go up. Back in November of last year, that number was 31 on their index. January went up to 35 and it's at 42 now in February. I will say though that anything under 50 is considered to be poor home building conditions, and anything over 50 is considered to be more favorable to home building. This, I think, is why Lawrence Yun is saying that prices are beginning to bottom out. Now, obviously, that's going to depend on where you are in the United States. Some markets have been hit harder than others. As he said, prices vary depending on a market's affordability, with lower-priced regions witnessing modest growth and more expensive regions experiencing declines. So putting all these numbers together, we're seeing that the median price is going down here in Ada County, gone down about 19% since the peak back in May. Days on market is going up, and the percentage received compared to the original list price is also going down. So all of this makes for a bleak forecast looking into the future, right? Maybe, but honestly, I don't think that it's that black and white. In a seller's market, you see that prices rise, listings go down because they're selling really quickly, and the days on market is also going down. In a buyer's market, though, the prices will go down because there's less demand. Listings go up because they sit on the market for longer. What we're seeing in Boise, though, is kind of a combination between both of those. Prices are certainly coming down, and the days on market is certainly going up, but the listings has actually gone down. And I think that that, again, is related to the interest rate. Do sellers want to trade a low interest rate for a higher interest rate? If you don't absolutely have to, you're not going to, and that has caused some potential sellers to sit on the sidelines and not list their homes. So fewer listings and less inventory on the market, I think, could keep prices from free falling, because the recipe for a crash is high supply and low demand. What we're seeing here, though, is low supply and more of a low demand because buyers are sitting on the sideline because of the higher interest rates. So with the month supply of inventory going down and the home builder sentiment going up, it'll be interesting to see what happens in the coming months. The wild card on all of this, I think, though, is the Fed. What is the Fed going to do with the interest rates? Now, we have been seeing inflation coming down. It was at 9% or so several months ago. It's down to about 6%. But in February, the CPI came in a little bit higher than anticipated, so that affected the markets. The interest rate inched back up the past couple weeks. And so I wouldn't be surprised if the Fed did go for some more interest rate hikes in the coming months. Keep in mind, though, that we had 8 aggressive interest rate hikes in 2022. And all of those rate hikes resulted in a decrease in the median of about 20% here in Boise. So what's the Fed going to do in 2023? Now, we have seen inflation come down from about 9% down to 6%, which is still higher than the 2% that we're shooting for. But But I don't think the Fed is going to be as aggressive in their rate hikes in the coming months. They've seen that it's already taken a toll on our economy, so I wouldn't be surprised if the Fed kind of scales back their aggressiveness a bit. I think this may affect the mortgage interest rate some. It may tick back up slightly, and this may affect prices a little bit. We may see some lowering of the prices. But because we are seeing a dropping in the month supply of inventory, this may balance the equation as well. So if I had to put it all together and give it my best guess, I would say that the worst may be behind us and we should expect prices to stabilize in the coming months. Hey, thanks for watching. If you're thinking of moving to Boise or anywhere in the Treasure Valley, really, I'd love to be your real estate resource of choice. So please reach out to me. I'd be more than happy to chat with you.